It's Sunday, the 26th of March 2017. I wanted to have a chat about something I read this week that I found quite interesting, and it's sort of going with my investment approach of late. It was some research about construction of mines and the performance of share prices in gold mining companies as construction progresses and they go into production. This was done by Louis James from Casey Research, and it was presented at the PDAC conference, which is one of the biggest mining conferences in the world in Canada. And he was really talking about the upside that is available to investors going into this construction phase. I mean, normally this is a chart from Brent Cook's Exploration Insights, and there's a few different variations of this chart floating around, and it's just sort of the life cycle of a junior mining company. And I guess particularly in the speculative gold space, people really tend to play in this high risk, high potential value exploration stage. So drill holes being released every couple of weeks, capital raisings, all that sort of stuff, high volatility. But a lot of people tend to forget about these companies when they go into this so-called orphan period. And this is generally feasibility, financing, and then construction. So what James is saying here sort of goes along with this this chart, that it's the institutional investors who tend to drive the prices higher once financing is achieved. So they want that lower risk opportunity and don't want to have to deal with that kind of volatility. So it's often there'll be a large capital raising or whatever to institutional investors as part of the financing package, and then some debt issue as well, and then they'll go into production usually within sort of 9 to 15 months, say, depending on the size of the mine. So just some of the stats out here that I found quite interesting. He's really pointing out here that of the 100 companies that they researched, 92 who had financing went on to build their mine. So obviously, if you've got financing, you're likely to go on to build their mine. So that's not that surprising. But among those companies, the performance was that they, on average, of those 92 companies that went on to build their mine, they saw an average gain of 91%. Now, obviously, a lot of that's probably occurred. I think this is over a period of the last 20 years or a bit more, maybe. Probably predominantly Canadian companies, I'd say. But I think the same applies for the ASX listed companies. But now, obviously, a lot of that's been a bull market in gold equities, so you could expect that to be the case. But even then, there's a key sort of sentence here. Even in the bear market period, companies that went into construction, the average gain was 27%, and that's a pretty good return. For a fairly low risk strategy, I tend to think, compared to dealing in this space anyway. It's definitely a low risk strategy. So this is not. I've been investing in quite a few mine builders of late, and I just thought this sort of married up quite well with what I've been looking at. One of those is Gascoyne Resources. This is, I think the market cap's about $200 million. Had a massive run up in 2016, non-stop all the way from 10 cents to 70, and it's sort of consolidated a little bit. Just in the last couple of weeks, they've got financing for their Dalgaranga project. They've got the equity portion of the financing, and I think the debt portion will follow shortly. It's a pretty decent project, very low cost, under $1,000 an ounce, which places them sort of in that lower third of producers probably. And then 100,000 ounces per year. I think there's a bit of upside to these figures as well, potentially toward 120, 130,000 ounces in the first couple of years, and extending this mine life out to 8 years plus. So I think there's going to be some more resource upgrades in the near term. They seemingly keep adding ounces from the more exploration they do. These are fairly shallow. I mean, it's not high grade, but that doesn't necessarily matter in open pit operations. I guess it's an earth moving task, and the ore here is quite soft as well, so the power consumption is quite low. They're going to construction. They've given a letter of intent to GR Engineering, who I've spoken about before in some of these videos. They're sort of the premier engineering company for small gold mine development, I guess. and they've built dozens of these plants, I think. So they're probably a pretty good company to trust in that task. The other thing I like about them is they've got, so you can see here, there's the cost curve of where they expect to fall. So in that, with Dalgaranga, they're in that lower quartile. Their other project is Glenberg, which is a, where are we? Yeah, so there's Glenberg there. I mean, they haven't done much work on that of late. I think it's they've been really focused on Dalgaranga, but there's another 1 million ounces of gold resource there. That hasn't been much work done to define those. It's only a fairly small reserve, I think, if they have any reserve. Maybe they don't have any reserve at the moment, but they've got the original pre-feasibility studies 3 or 4 years out of date. So I think you can see here they're updating that, and it wouldn't surprise me if that they could double the amount of ounces there, and it's a fairly low capex as well. And going into production, they're really going into production at Dalgaranga. They've really got the ability to fund that at Glenberg as well in, say, the next 18 to 24 months. So I like that they have that second project that the market's not really valuing at anything. I mean, they're probably reasonably well valued based on that first project, but I think there's the upside there and then the upside from that second project. And it's fairly rare to have a company like this where it has that second project sort of almost ready to go, that really only needs work done on the feasibility, but the gold is definitely there. It's just a matter of doing that feasibility work. But on the chart, I think it had that big run up, and there hasn't been a lot of there's a big accumulation going on there, and I think we've seen that sort of sideways action since then, and I really like that about this stock. Even in the 4 months sort of in the gold downturn, there was very low volumes going on there. I guess everyone was kind of waiting for this financing stage, which was confirmed a couple of weeks ago. They went to did the capital raising at 50 cents. So I've been buying in the last couple of weeks, and I think this really has the potential to be worth sort of upwards of 80 cents, and that's on current value or current information. And if Glenberg offers some more upside, I think that $1 here is quite achievable. So it's a stock that I've been following. The other two just to digress a little bit, the other two mine constructors that I like are DCN Gold, which has had a bit of a bad run. I've talked about this one a couple of weeks ago, but I think it's bottoming out here around this. It's bottomed out around $1.80, and they've definitely got financing. They've got the debt and the equity arranged for their Mount Morgan's project, and I think this is a good one to be in as well. Just a relatively high quality project. And it's got that almost 200,000 ounce per annum scale. And there's not many operations in Australia, any new gold mines coming along that have that sort of scale. The only other one is really Gold Road's Gruyere project. Gold Road's a stock that I hadn't really dabbled in it much in the last 2 or 3 years when it's had this great run up. But they did a deal with Goldfields to finance half that project. They sold half of it off for more than $350 million, and got a really good deal with some of the financing arrangement. I think Goldfields have got responsibility for any cost overruns up to sort of $50 million or something, which is a very good clause to have, because often these projects do go over budget. But I've been getting pretty bullish on this stock around. I've been accumulated at sort of 52, between 51 and 52. So I think I've got a reasonable entry there, and I think this, as going back to that mine building, this is going to be one of the premier gold projects in the world in the next 3 years. So I think you're starting to see there's been a few institutional investors starting to add here, some of these big bars, and I think you'll start to get. I speculated that it might get added into the junior gold miners ETF as well in March. That didn't happen, but I think that's inevitable in the next 1 or 2 rebalances. Not that that's necessarily a good thing, but you can look at the video I did on that a couple of weeks ago for more info there. But I'm really liking this stock. I think it's bottomed out here, and I think you're going to see that new wave of institutional investor come into Gold Road, and that's going to push the share price higher. So in the last sort of 6 months have probably been those speculators and people who are hoping for the takeover offer to come have been the ones exiting. So I really do like Gold Road as a stock, and it's one I think you can put in your, if you're a bullish on gold but you still want a little bit of upside. They've got good exploration expertise, and I think they'll do well in the next year or so. So that's another one of my plays. But yeah, GCY, Gascoigne, I think is also a good stock to be in at the moment.